Ladies and gentlemen, good day and welcome to Q4 and FY2024 conference call of DCX Systems Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. The statements are not the guarantee of future performance and involve risks and uncertainties that are difficult to predict. I now hand the conference over to Dr. Raghavendra Rao, Chairman and Managing Director, for opening remark. Thank you, and over to you, sir.
Thank you. Namaste and good afternoon, everyone. I extend a warm welcome to all of you for our Q4 and financial year 24 earnings conference call. Joining me today, our CFO, Mr. Divakaraya, Mr. Shivakumar, VP Operation, and Mr. Neeraj, DGM Corporate Affairs. The past quarter and the entire year has been very eventful for us. We have crossed several key milestones in our journey. In the financial year 24, DCX has achieved its highest revenue and PAT with consolidated revenue of rupees 1,424 crores and PAT of 75.78 crores. As part of our backward integration strategy, operating at our EMS subsidiary Ranil Advanced Systems are on track since beginning from September 2023. In the span of 6 months from its operation, Ranil has achieved the revenue of 236 crore, which is commendable. Sufficient capital has been infused to ensure ample capacity for the next 3 to 4 years. The PCB manufacturer at Ranil are helping us to have a better control over the quality, supply chain, and raw material cost, which are vital for our system integration business. Going forward, we aim to create our EMS services to the market for the aerospace and defense sector, as well explore high-end applications such as in medical and railways. Moreover, in line with our commitment to innovation, DCX entered into the joint venture agreement with IA Elta System Israel, and we established a JV company in Israel named NIAT System Limited during this year. This venture is focused on developing cutting-edge optical detection solutions for the railway industry. Utilizing superior radar and optic technology from the ELTA, NIAT will leveraging the existing facility at DCX, Ranil to procure PCBs, cables, and subsystems, and further strengthening our business visibility. This overseas tie-up would also facilitate access to the global market and positioning us leaders in the railway sector, especially on the safety systems. As a major part of the 500 crore that we recently raised through QIB in the beginning invested in this JV. In the recent months, we also witnessed the new contract we signed, purchase order. We got the purchase order worth about nearly $2 million from one of the prestigious and topmost defense company called Lockheed Martin US. Having this prestigious brand is our client should open up new avenues for us. We also on a purchase order from the other overseas new customer, accumulating amounting about $55.13 million. This is the new line we entered on the new geographical penetration. This gives us a confidence with a robust and growing order book. During this year, we are awarded a certificate from the recognition of as a 4-star export house from Government of India, DGFT. On other note, we anticipate revenue growth from our MRO, maintenance, repair, overhauling programs. We recently signed supply and service agreement with Israeli Aerospace India Service Private Limited. It is a 100% subsidiary of IAI Israel for MRO services, which further strengthens our strategic partnership with IAI and underline our expansion in domestic defense opportunity. In conclusion, DCX well positioned for the growth with market opportunity globally by leveraging its manufacturing capability and partnering with the global technology players. Now, I would like to hand over to our CFO, Mr. Diwakar Iyer, to take you to the company financial performance. Diwakar, take over.
Thank you, Dr. Rao. Hello, good afternoon, everyone. It gives me immense pleasure to address you all, especially since this is my first interaction with you all as part of DCX system. Let me take this opportunity to take you through our financial and operational performance during the fourth quarter and full year. As highlighted by our CMD during his address, we take pride in announcing that we have achieved the highest turnover in the history of the company during the current financial year. Also, it is heartening to note that the company has well started its journey to become a product company. Here are the financial highlights of the financial performance of the company on a consolidated basis. Quarter 4 FY24. In Quarter 4 FY24, we reported a revenue of 746 crores, representing a growth of 46% as compared to rupees 510 crores reported during the corresponding quarter in the previous year. Growth was primarily driven by successful execution of order book. EBIT for the quarter reached rupees 51.91 crores as against rupees 55.16 crores in Quarter 4 of FY23. The PAT for the quarter amounted to rupees 32.95 crores vis-a-vis rupees 41.13 crores reported in the corresponding period of the previous financial year. Now I will give you the details for FY24. In FY24, we reported a revenue of rupees 1,423 crores, which shows an increase of 13.59% year-on-year from rupees 1,253 crores last year. Our EBIT also increased for the year to rupees 124 crores from rupees 111 crores in FY23. This represents an increase of 11.68%. Profit after tax for the year reached rupees 75.78 crores, demonstrating a healthy growth of 5.72% compared to 7.618 crores in the previous financial year. As at the end of March 24, the net debt of the company has come down to rupees 270 crores compared to rupees 504 crores as of March 23. This represents a reduction of 48% over the last 1 year. The current assets of the company have improved to rupees 1,750 crores as of March 31st, March 2024 compared to rupees 1,180 crores as of 31st March 2023. This has resulted in a healthy improvement in the current assets ratio to 2.57 as on 31st March 2024 compared to 1.83 as on 31st March 2023. The net worth of the company has increased from rupees 566 crores as of 31st March 2023 to rupees 1,126 crores as at 31st March 2024, which has resulted in a healthy debt-equity ratio of 0.24 as at 31st March 2024 compared to 0.89 as on 31st March 2023. This is all from our side. We can now open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Deepak Saha from DR Choksey Finserv Private Limited. Please go ahead.
Hi, good afternoon. Am I audible?
Yes, Mr. Diwakar, we are.
Okay, thanks. So first of all, very hearty congratulations to the entire team for this outstanding revenue number that you have delivered. So now my first question is, now since Raniel is fully geared up with nearly 240 crore out of revenue, we have done only in a period of 6 months' time. And what I believe we are largely doing high-end, high-value defense-related PCBAs in Raniel. So now when we talk about medical sector or medical devices and other electronic devices, how our strategy going to be? There also are we targeting same high-value PCBA to deliver lower volume and probably on the margin side also higher margin? So how is the opportunity and strategy on the non-defense part for Raniel there?
Okay, let me take this question. Thank you so much for your appreciation, Mr. Deepakji. What we are in the Raniel, presently we are doing aerospace and defense. We want to add medical and railways too. In the medical sector is coming from thermometer to CT scan equipment. That means 10 rupees of thermometer to the 5 crore of CT scan machines. There is a category. In our area to concentrate on the high value equipment, not for going for a general high volume and low end product. Because I created a facility for a class 3, which is as per AS 9000 standard. It is equivalent to the aerospace and defense, also medical. I concentrate more medium volume and high value program and a complex program, specifically to answer your question. And that is our target area. Again, coming back to the railway, already we are very much close to the NIART system and a whole bunch of manufacturing. Even though NIART gets the order from the wherever in the globally, the manufacturing to be taken place in India about we want to build completely semi-assembly of radars. It is a big complex product. It's a high value product and there are optics there. So those area we are concentrating presently. And to answer you specifically, we are concentrating on the high value and the highest complexity and the more technology driven program. We are concentrating on the PCB assembly. Of course, presently we are not entering to any low value and high volume kind of a business. Where we have a visibility, we have a particular customer, and we have targeted that into the upcoming days. I hope I answered your question.
Yes, that gives a lot of clarity, and I think that is the way the right forward, since we are already doing so good on the high value segment. So my second question is, recently you have signed Israel Aerospace India Services Limited largely for the MRO segment. Now currently we have probably not meaningful contribution to the overall revenue for MRO, but what is the strategy behind it? Does it give us more visibility in terms of stickier revenue with this kind of tie-ups with companies like Israel Aerospace India Services, especially on the MRO side? Because I think this is a kind of visible and stable top line that it might contribute. So what's your take on that, sir? And if you can share the strategy behind it.
See, basically, as you know, MRO is a big business opportunity in India. I'm not going to the flight MRO, aircraft MRO. What all this OEM supplied to the India from past 10 years back, those equipment required a upgradation of technology, software upgradation, and the hardware upgradation, and the repairs is required. So strategy is very clear. And, the big company itself, they have put 25, 30 people transfer from Israel to the India. They had a huge facility in Delhi, Gurgaon, to take care of separate business unit. There is a CEO, CFO, many engineers. Israelis are coming and sitting, take this opportunity forward. And that means is a big value will be created in MRO. Because the value what they bought today in India, it will be huge. Electronic product has been imported to our border security, and maybe those our MROs are required. It's a part of process. It is required. Where we are key component, where already we are supplying spare, PCB, cables, and some of the power supply. Many things we want to do it. That presently, as I don't have any PO, because now it is the engagement started recently. And upcoming days, I'm expecting a good potential for those business. And it is going forward, I'm seeing a lot of opportunity for DCX, where because the many program, we are the offset partner, we are the manufacturing partner. It is easy for us to repair or upgrade or spare support, those things. So this is what we are expecting to get a big boom in the MRO business. And MRO is a quite heavy duty business, and repair always required for a maintenance and repair. I'm seeing very potential, which we are in fact in my IPO roadshow or on my object and the DRHP also I mentioned my core of course we are doing some of the small repair and the low level repair of the MRO support we are doing. Now we want to, there is an opportunity, there is a requirement for India to do the local vendor MRO. It is very much required for our armed forces also, which we are join hands with this company.
Okay, that's clear, sir, and fair enough as well. So now coming to specifically for this quarter, we have delivered stellar top line, especially at 700 crores. But when we're looking on the margin side, so definitely there is certain moderation. So is it largely because of certain product mix that we had to deliver in this particular quarter, which impacted the margin, and subsequently we'll see shoot up on the margin front because now your PCB is also fully integrated, generating decent amount of revenue. I mean, especially on the captive consumption side, right? And we don't have yet started any commercial production. So once both these things come up into the picture, with commercial production on granule and also internal consumption for the captive purpose, what kind of margin we are looking ahead? And is it the right understanding that product mix probably impacted our margin this quarter?
I'm not, I don't know really which, as per I'm as a majority shareholder in this company, I'm very happy about the performance of the company. I'll just give you, last year I done about 1,253 crores revenue. This year I done about 1,423, consolidated I'm talking. So there are 14% jump in the revenue. And last time I done a PAT of 71.5 crore. This year I done a 76 crore PAT. That is 5.72% jump. See, further, I will tell you, majority you can see, there are possibility that PAT can go up. Of course, you mentioned going forward, renewal is now only just, even though September is started operation, real production started in last 3 months, last quarter only, the regular production. And adding more to the city of Ranil, it will increase our PAT definitely from the next quarter too. And also, maybe my PAT could have much better instead of 76 crore, much better because of the one reason. See, the majority of the billing, about 50% of the billing taken care by in the last quarter, within a 3 months quarter, about 750, roughly about 740 crores. As you all know, what all contract I get from the customer is a heavy duty PO and a long term in nature, minimum 2 to 3 years. When we sign the contract with the OEM customer, where there is a one class, because today, this is a price, we cannot hold it electronic price today. Today I quoted $1. Maybe this will go to further that always 20%, 10% increase, become $1, become $1.2. There is a contract between the customer, not with all, a major customer, have called a material guarantee. Suppose you can see you are decided a product to $100 you assume is a material cost. This will become $105. The $5 we need to get it from customer. And majority of this revenue taken place from the January, February, March, there are incremental in the price where we need to buy, paying more money, getting it refunded by customer. Now, as you know, we are already in the quarter, we booked for the purchases, which has to be accounted within March 31st. Subsequently, we have not claimed back this money from the customer, which we have closed on the March month, where I cannot go back to the customer every like $100 more, give me. No. The contract every year end, we do the consolidation of this material guarantee. Our SCMT give report, we need to go to customer, hey, look here, you give me $100. Now it's become $110, approve me. Then subsequently, I need to raise an invoice and take that money. So maybe that is the, of course, there are subsequent prices gone up for the raw material, which we are not claim back the customer because majority billing takes place in this last quarter. Of course, this is not a reduction of margin, a PAT. It is postponement of margin for a next financial year. So this is what we can expect. Still, in the impact of raw material going increase, still we achieved the 76 crore, previous to the 71 crore. Of course, this will be a postponement of PAT. We need to claim back the money from the customer, which we are not allowed to bill within March 31st because we need to give a lot of account where we supposed to account which we already purchased the material. So this is the difference, and this will go into postponement of the PAT, not on the impact on the PAT.
Okay, and that's really helpful, sir. So what we are essentially saying that whatever we have say lost in this quarter is going to come back since the claiming is yet to materialize. Is the right understanding, sir?
You are absolutely right. You are absolutely right.
Okay.
In the postpone,
that's
because
super.
you are already purchased, you have to account it. That material cost you assume $100 is become $120. That means you want $20 extra spend. That $20 to be claimed from my customer.
Right. Oh, that's really clear, sir, and thanks for this detailed explanation.
Yeah.
So my next question.
Deepak sir, may we request you return to the question queue for any further questions?
Sure. Just one attached question. I'll go back in the queue. Just one last question on the debt side for Krishna sir. Sir, we have reduced our debt quite substantially from 550 odd crore to nearly 260 crore odd. Nearly 40 to 43% debt reduction we have done. So can we expect a similar level of debt being maintained in the coming years, at least in FY25 and FY26? This
will vary on the project. See, majority of my, before finance asked this question as a business head, so I will want to answer. This suddenly, I am also happy that debt reduction has been taken place because what payment terms I have with the suppliers. Okay, what payment term I have with the customers. So majority of the customer, I don't work with a higher value PO without advance money, mobilization advances. And depends, and if customer pays, my borrowing will reduce. Okay, if I need to invest, my borrowing will go to increase. That depends. See, I am not doing only one program. It's a general program. I have very happy to announce that. So I started with only one customer. Now I have added last 3 years about another 17 international customers. We have a different payment terms, different delivery schedule, different. Even though IA got about 7-8 programs, which one they'll give priority? Which customer will give delivery schedule? Which material is available on the inventory side or available with the customer? So those things matters. So we cannot tell you that maybe it will maintain the same or is going to increase from the borrowing next. Prasanna or Divakar, you can correct me if I am wrong on this subject. Okay, that depends on the program. The borrowing is going to take place.
Yes, Dr. Rao, you are absolutely right. That's what we are expecting. Depending upon whatever the program we are going to do to a particular customer in a particular period, the impact on the debt will be there. That's for sure.
Okay. So largely what we're doing is this project-wise financing that we are following, right?
Sorry, repeat again.
I mean, so largely probably we are looking for the project-wise financing as and when the kind of size is there, we are accordingly probably looking for that debt levels or the financing levels to stay there.
Yes. And secondly, the biggest advantage what we have received now, I will give you few examples. Maybe this year, I need to appreciate my supply chain team. They are able to negotiate with the supplier, our supplier, to the better payment terms. Earlier, we need to give advance and get the material, then your borrowing goes up. Now we are able to get a credit terms with a customer based on our credit level and credibility of payment and the relationship. We are able to get the good credit terms with the customer. That is going to help us in long term to reduce our debt.
Yes, absolutely. Fine. Thanks a lot, sir, for all these answers. I'll get back into it. Thank you, sir.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please restrict your questions to 2 per participant. If you have a follow-up question, you can rejoin the queue. The next question is from the line of Dhavan Shah from AlphaStreet Advisors. Please go ahead.
Yeah, thanks for the opportunity, sir. So my question is, you mentioned that we'll be claiming the incremental raw material inflation to the client. So how much amount are they going to claim, and when are you expecting to receive that?
No, there are calculations just we closed. There are many data to be collected. Presently, I cannot tell you the numbers because it's not been freezed for not only for material variation. Suppose they told me to do only assembly. We done extra engineering support and the mechanical support. Those workforce also to be quite a good amount of the money to be calculated, where not only say giving the Excel sheet and make it. We need to give a lot of engineering data, developmental data, picture development data, many things. Presently, I don't have a figure. It is subsequently is a very good amount. So what we are expecting, roughly about, I cannot tell you the numbers, but there's a good amount of money to be comes back from the customers. But definitely, once we are done, maybe we have kept a target of closing by next month to accumulate all data and forward. Not only that, I can declare that customer has to approve that. Now I declare is additional money, I need to give proof, I need to give many engineering data, then they'll approve, then I am allowed to raise the invoice. This is the process.
Okay, and logically, if I look at the last Q4, maybe Q4 FY22 and 23, we were doing roughly 12-13% gross margin, and now we ended up with 6%. So is it safe to assume that the incremental 6 or 7% gross margin on 750 odd crore kind of revenue is equal to roughly 50 odd crore, which can be, claim and we can maintain the gross margins. Is it understanding correct?
I cannot promise you that. I don't have an answer right now. And see, gross margin also not only for increasing the gross margin and reducing the margin, there are two ways. I am doing 4 vertical business. Okay, cable, system integration, and the PCB, and other services like fitting. And I have a certain different program, different profitability. And which year I done more vertical wise. Let us take I do system integration. Cable I do more, I'll get more profit. That is also matter to increase the PAT. Okay, that is one vertical wise. And major what I see in the rough calculation, majority of 70-75% of the material cost is gone up, which we need to supposed to be climbed back. Presently, I don't have a number, but it's a very fairly good amount of money we need to get it.
Sure, sir. And how does the contract happens, in terms of the raw material with the client? So up to how much percentage of inflation you can claim? I mean, is that beyond 5%?
There is no limit because today maybe $1 part. I'll give you an example. When the last year after the COVID opened, there is a semiconductor problem, supply chain disturbance. I used to buy for one part for $100. Okay, one major part, $100. The part I paid $450 because of the shortage in the market. The $450 approved by additional $350 by customer. Okay, you cannot say 1%, 10% more. See, this is not a general commercial program like class 2 component. These are custom made long-term lead time parts, LLI parts, and have a special characters. And maybe customer can increase the channels in the same component. Many things based on that price. We cannot define maybe 300 times more or 10%, 1%. Also they have any OEM design major chipset, they have a contract price with the component manufacturers. Okay, let us take Lockheed or anybody produce they have option with Intel, they have option with IBM, they have option another chip manufacturer. They have their own choice, and wherever they get a good price, they'll use their chipset and design the product. So that's called a contract price before using the component. So those also matter. In the raw material cost goes up in the many areas. Those people cannot maintain the same price. Then they have to increase the price, which I don't have a control of any part, which customer agreed. This is called a material guarantee. I have it in writing agreement with most of my major clients that any variation in material, they have to compensate. So this, I cannot say 1% to 2%. There are many examples.
Got it. Got it. And normally based on the history, let's say, if you claim maybe in May end, how long does it take from the customer side to approve the claim?
See, normally this is a process of about a month's time.
Okay. So in 1 month time,
not only that, they have always extra amount loaded in the PO for emergency process, which they have a previous approval. Once the head of material is approved by the variation on the material cost, so maybe in my experience, within 3-4 months, we should climb back the money. That depends on is a raw material or is other engineering. So both are different. In roughly about 3 months, you can see once we submit valuation, proof, bill, many things we need to give.
Got it. And just one thing is Renewal. I think you mentioned that Renewal has done roughly 236 crore kind of revenue in the second half. So this is mainly used for the backward integration. And I think if I look at the fourth quarter raw material consumption, it is roughly 700 odd crore. So is it safe to assume that we have captively consumed roughly 35% of the raw material from the Renewal?
Yes. That is captive business. You are right.
Okay. So and how much capital consumption can we do in FY25? This 35% can go up to what level?
So in captive, in this year, captive consumption goes maybe about 70% and 30% in other business.
Okay. And what kind of gross margin increment or addition can we look at because of the backward integration?
Presently, I don't have any open PO for direct orders, which is in the pipeline. So presently, I cannot tell you the number. Maybe next quarter when we have an earnings call, I have a better clarity there.
Sure, sir. Sure. And lastly, we are targeting roughly to increase our non-IOP based revenues. So what is our, what is the margin differentiation between IOP and non-IOP? And we have ended up roughly 800 crores kind of the order book as on March. So any breakup can you give between IOP, non-IOP, and what kind of numbers can you look at maybe 2 years down the line?
See, today in present situation in our revenue, it is a mix of, I can say, offset order, that is in your language, I can say IOP order maybe about 30% and 70% is a non-offset order. Okay. And margin is not greatly different between. In non-IOP order, we have some extra coverage for doing some extra work and engineering those things. Compared to IOP, is a non-IOP business is little bit more.
Got it. So we can safely assume. Sure. Yeah, I'll get back.
Thank you so much. The next question is from the line of Hiren from Kalpavruksha Capital. Please go ahead.
Congratulations for the good sort of number. I have just a couple of questions as it was covered earlier by the other participant. One is, if you can put some light on Lockheed Martin order and what further potential we can see towards this order, business potential from them. And secondly, the order book with this as on date, if you can guide on that, the margin, which will be a sustainable margin, EBITDA margin going forward.
See, now what we received Lockheed Martin about nearly $2 million, which we have received for the electronic assembly, which we have received and executed successfully. And what we got the result, it is a fantastic report. And we expect to get a very good visibility for upcoming POs. And they are very happy about the quality, delivery, and the many regulatory has been taken care, and as per the MOD guidelines, everything, they are very happy. Successfully, we done $2 million. That too in the span of about 3 months, we are able to deliver. And as a marketing head, I'm very optimistic to get more big business because the big company and they have a lot of requirement in multi-million dollar requirement. I'm expecting a very good pipeline orders from them. Very positively. And what is the next question you are asking for the
order book? As on date would be.
Sorry?
The order book as on date would be around 800 plus something, or it is
on the March 30th. Yeah, on March 31st, we had about 800 crore order book. But I wanted to tell you, all my investors, we have a healthy pipeline order. Hope to have a conversion very soon, which could take care of all the pipeline order, current order book. It will be take care of next couple of years.
Oh, great. The second question was on the EBITDA margin. What would be the sustainable EBITDA margin? Because of the last couple of quarters, we saw some dip compared to previous years. So what could be the sustainable EBITDA margin?
In seeing my business vertical, as you mentioned, We are adding Renil, that is a major strength, and we are adding near to GV on the productionize of the railway product and getting to the other area and the new customer, what we are expecting to get some pipeline orders. And definitely my investors will not be disappointed for every time upcoming days.
Okay, great. Just last question. On the data side, we saw on the March 31st, the data are almost double or more than double to the previous year. I had heard about the purchase adjustment because we purchased early and then maybe that get adjusted. But that if that figure could be around 40-50 crore, still it is a double is a big figure. So any particular reason or what should be the average data base going forward?
No, anybody understand this question? It's too low for me. Prasanna,
No, I busy
May I repeat this?
can you please repeat? Because
Yeah.
a little louder, please. We are not able to.
Yeah. Is it better now?
Yeah.
So on the data part, we see that the data have increased, I think, from 320 odd crore to 660 odd crores for the March 31st, 2024. So after adjusting the purchase difference, what we say we booked early of the some purchase. So if we might adjust the 50-60 crore, still the data amount is almost double, the receivables. And
if you can I take this question, Dr. Rao?
Yeah, go ahead.
Yeah. If you look at this particular quarter, we have executed orders worth about 750 crores, which is something like 50% of our annual turnover has got executed in this last quarter. Which means that my billing in the month of February and March would be much more than 500 crores. Also, obviously, the data part will be taken care in the coming year, in the month of April, May, which is in the current month. It will take care of the particular year. That is the main reason for the increase in data.
Okay. And does this increase was due to some seasonality of order or this was now the new benchmark we should consider?
No, it is not any benchmark or anything. It is a particular program which we did in the last quarter. We had to execute certain particular orders and the programs which we had to execute. That was the reason why it has got executed during the April, in the month of February and March, where the data would have got, the receivables would have got built up because of that reason.
Okay. But rest for the next year
Now I
onwards?
understand exactly what you are asking. See, as our CFO mentioned, the execution about nearly 500 crore in the February, March, majority bill, and your question is still we are not received March 31st. It is showing the more receivables. Definitely, we cannot expect February, March bill to settle down completely to, because March 31st you have to show your outstanding with customer.
Right.
Then once maybe already I started receiving more than a $20-25 million in the March, April, May, June. This will go because this is the only majority of billing in the within the last quarter. That too in the 2 months majority about 500 crores. And see, the beauty is with my customer, my payment terms and the where we are working is very, very clear, and payment comes without any follow-up, and we are very, very conclude and clear path. Normally, DCX doesn't touch the PO without an advance, and also the major payment collection is very, very clear cut. My customers are Fortune 500 companies, they will pay. But because of the accounting policy, I need to book the receivable on March 31st. Maybe in the transit, maybe you are booked in the February, maybe product is not even reached the destination where they couldn't able to account and pay. So maybe that is the reason you see more receivable from the customer. That is the explanation.
Got it. Perfect. Just on a clarity on this part, the sales would be in the same. Yeah, sorry. I'll come. This was just related to this. So I thought I'll complete that. Hello.
sir, if you have any follow-up questions,
No problem.
I request you.
Sure. I'll come in the queue. Thank you.
Thank you so much, sir. In the interest of time, ladies and gentlemen, please restrict your questions to 2 per participant. The next question is from the line of Anand Trivedi from Nepean Capital. Please go ahead.
Yeah, hi, Mr. Rao. Thanks for the opportunity. My question is more around React. Can you give us an update as to how that is progressing in terms of getting orders from the railways?
Presently, see, the product is developed and the demo has been taken care and all the qualification has been done with the customer. And we are expecting see, this is a government order. It has to go through tender process. We expect, because it's a big requirement and also necessity for the railway, and we expect, now we are good to go for a mass production, and we are waiting for the tender to happen and conclude to be taken. And we are just qualified in just last 3 months. So for the other test, what is pending, it has been what we received the PO in the first 5 number. Now everything is satisfied. We need to get a PO tender process, maybe after elections. So after the protocol, we are expecting some tenders.
Okay. And the second question is regarding what you had mentioned, that you have received purchase orders of around 55 million from overseas customers. Can you give us a little bit more details in terms of, who those customers, I mean, are they like Lockheed Martin, big customers, or what segment of your business that orders from?
Whatever I mentioned, $55 million, it is the same line of mix of cables, mix of PCBs. But unfortunately, I don't have a permission to disclose customer name. You can see my disclosure also in the DSC and NSE. Normally, I won't disclose until customer approve. These are all very sensitive program. As you know, I do classified program. Even though sometimes I'm not allowed to disclose the customer name. I'm sorry for that.
No, not a problem. Thank you so much.
Yeah.
Thank you. The next question is from the line of Saumil Shah from Paras Investments. Please go ahead.
Yeah, hi, sir. So if we see our order book position for last few quarters, it is constantly reducing. I mean, when we got listed, it was somewhere around in Q4 23, it was around 1700 crore. Then Q1 FY24, it was at 1500 crore. And now currently it is standing at 800 crore. So what is the reason for constant reduction? Are we seeing facing any challenges? Or what would be our outlook for current financial year? Hello?
No, some connection issue, I believe. Can you please repeat because we are not able to hear you properly. Can you please repeat the question?
So if we see our order book position, last few quarters, it is constantly coming down. I mean, when we got listed, it was around, in Q4, it was around 1700 crore, FY23. Then it came down to 1500 crore. In Q3 of this previous year, it was at 1100 crore. Now in this current presentation, you have shown it as 800 crore order book. So what is the reason for constant reduction in order book?
See, normally in this our area, in my 25 years experience, some company get PO every month, every twice. So keep on adding. In my last 12 years history, my POs will be heavy POs. So it will come minimum, I can say 500 to 1,000, 1,500, 2,000 crore, one single PO. It will be executed in 2 years. In the duration of the PO release, in the current situation, earlier I used to get yearly 2 POs. Okay, 2 POs, 2 customers. Now we cannot expect the PO every month or every quarter to add on to the book because there are a lot of process, controlled, license issue. Even though I quoted, assume millions of dollars, so those have to be approved by the board, security, many reasons. So in normal in case, it has been improved compared to the last 2 years. We are able to get, because my customer base also got increased as well as the India as well as the overseas base. Now I can say yearly we can say about 4 or 5 big POs is going to come. So naturally earlier quarterly it has been reduced. That means new PO has been not added. See, suddenly I have one recently I got about 470 crore PO. And we are working for the last 6-7 months. Like that PO comes. And we naturally in the exact quarter I need to declare. So today, March 31st, I declare. Today, my order book was a different situation. Maybe I am expecting some pipeline order. It will go up. So we cannot add every month a PO in our business. Yearly maximum 4 or 5 POs comes with, because now we increase our customer base. Maybe I am expecting. That's what I told. Our pipeline visibility is very good. It is going to take care of another couple of years for my revenue. So those things. And we are really focused, and I need an order book more than anything to sustain and keep our things rolls. And we are fully concentrate, and we are confident that not to hit any visibility of the order book. No, only thing is healthy. We are a healthy position and taking very fully concentration on the customer wise and the order book wise and visibility wise. I am very happy that the way DCX is moving forward for a visibility of next 5 years, and there is no problem for that.
Okay. And so in terms of revenue, sir, any guidance for this financial year?
Sorry, we are not having a practice to give a guidance number. We'll see from next financial year.
If not quantitative, sir, any qualitative guidance, maybe high teens or mid teens, something you can guide to our shareholders?
Healthy growth, that much I can tell you. Definitely I do. You can see my performance from last 7 years. Always my graph goes up. Okay, year to year there is a growth. Okay, and I never reduce either PAT or revenue. But in overall business opportunity where we enhance the facility and financial strength and the quality what we delivered, adding more customers, so it will be in the very healthy book.
Okay, and in terms of operating margin also, we can expect better than the current year?
Yeah, definitely, because you are now you have your own facility. You have venturing into the railways product company, and also you are getting to some other program for a product. So we have definitely that is our aim to increase our margins. Definitely, this is the only way to add more services to increase. So that is for a running. Now cable also we have a new line has been added for optical cables. We expect definitely growth for the increase in our and improve our EBITDA.
Okay. So that's it from my side. Thank you and all the best.
Thank you.
Thank you.
The next question is from the line of Vidit Shah from Spark Private Wealth Management. Please go ahead.
Hi.
Mr. Shah, your line is unmuted. You can proceed with your question.
Thanks. Am I audible now?
This is much better, sir.
Okay. Thanks. Thanks for taking my question, sir. I have 2 questions. The first one was on the cost of, so basically on the raw material inflation, you spoke that we have to pass on some costs to the customers in the next 3 to 4 months. Given that 70 to 80% of our costs are PCBs and integrated circuits, if you could just guide us what has been the inflation, over the last 1 year or so, it could be quite helpful.
No, that cannot be a comparison percentage. As I mentioned, this will be, let us take last 2 years is very nominal amount. So this year maybe it is you can see from 3 years our consumption ratio was same. Now suddenly dropped by this year. That means I spend more on material. That means cost of the parts has gone up. So that depends on the availability. There is no such like grass, the eventful nature in this business. That depends. So we cannot tell you. You can see last 3 years, we are maintaining the same. That means the much increment will not be done. So this year, there are some couple of programs, not only for material cost, there are other financial spending has happened for the like big fixtures and the capex and which has to be refunded from the customer side. This has to be looked into that.
Okay.
Engineering costs, many things are there.
Okay. And my second question was on, so we had in the QIP raised about 200 crores for a purchase of new technology, to set up in the defense line in India. Where are we on that? Any update that you could share with us on that?
It is very interesting and things are going much more expectation of DCX. We are in very positive and we will tell you very shortly the brief. Maybe next couple of 1 or 2 months we will announce that to all my investors. And it is well within our radar and things are going very smoothly. And this will happen very shortly. I'll let you know, please.
Okay, sir. And sir, if you could just explain the MRO agreement with IAI and how it functions and, what is the sort of revenue we can make for in this segment given that it's a relatively new vertical. So, what is the potential that we have?
Yes, India, it is a big potential. No OEM started MRO in full-fledged in India. Only IA started MRO, their full facility, their own subsidiary in India. So definitely when foreign company come and put 25, 30 people in senior level sitting in Delhi and having a 30,000, 40,000 square feet in the Gurgaon area, that means it's a high potential, they have a figure. But it is a very good business, but I don't know exact what is my portion of the PO. So MRO, you can see in the net, it is running the billions in the MRO looking for that. See, earlier MRO used to go to other country, get it repaired and come. Now there are Indian companies, including DCX, we have a technology to repair and service those parts. So that is going in the larger volume kind of a thing now. That's the reason OEM IA started their own subsidiary and start doing the MRO within India to save time, to keep turnaround time fast, where they need a supplier. So I've done many programs with them, many prestigious programs. I have all the facility and the experience. Those chances have given me chance to associate with them. And presently, I don't have a figures, but this is for a extra income to the DCS. That much I can tell you. And also I want to tell you there is no extra investment, either capex or anything to be invested extra for this. Everything will be sufficient what we have today.
Okay, but we don't have a number on the percentage share that we take from, let's say, IAI contract.
No, there is no number there. There is no number. This all, it is not an open contract. I am an authorized person. They appointed an authorized person. And the PO also runs against volume, how many modules to be repaired, how many antenna to be repaired. Those things, we don't have a contract yet. Once it is there, start coming PO, and we'll let you know. There is no value mentioned here in the contract.
How many authorized people will be there for, let's say, IAI?
Presently, DCX is only one guy assigned with a company for electronics, as per my knowledge.
Okay, sir. Thank you so much, and all the best.
Thank you. Thank you very much.
Thank you. The next question is from the line of Karan Mehta from Nirzar Securities. Please go ahead.
Hello. Sir, am I audible?
Yes, sir, you're audible. Please go ahead.
Yes, thank you, sir, for giving me this opportunity. Sir, my first question is, our company wants to improve margins by focusing on Make in India program and transfer of technology. So how much margin improvement can we expect from these measures? And also, from which company are we looking to have this transfer of technology, and what will be the terms of arrangement for this?
See, transfer of technology, one is already done with IA for a railway JV. Okay, technology as a whole product designed and developed by IA System Israel, which we are already signed the contract. JV. So definitely the margins are very good because compared to build to print or a product company, you can see many product company and margins are much higher. That is one thing I want to highlight here. And going forward in existing business, there are two ways. One is we are adding many new customers in the pipeline. Also, we have added many additional work like PCB in-house facility and the program qualification, those testing areas. Those things have got more value addition. So going forward, this is our major concentrate. And Make in India, of course, that is another big program in India. We are working with another big company to have a JV or technology transfer. Maybe I will let you know in next very shortly. And that QAB also we rise for the 200 crore for that reason. That I have mentioned, I'm going to let you know. But the margins definitely, once you are there are comparison, your supplier is a different margin, your partner is a different margin. You are part of the program, you are become a OEM company and directly you're going to supply to MOD or DPSUs, many things are there. So that is a confidence level we have on the strategy and the JVs on the facility what we have done. Definitely that is the main margin, main concentrate to improve our revenue plus margin both.
Okay, sir. That was very helpful. And my second question is, what was the size of order book and revenue from PSU Defense and ELTA in Q4 versus Q3? And how will both of these shape up going forward?
Q3, what is early? See, now, whatever we present, 800 crore is not only ELTA. There is no ELTA, there is small portion of ELTA. What we have is new PO, open PO is a different customer, where I am not in a position to disclose the customer name. This is also about, again, 60-70% of the export and 30% of the domestic area. In the pipeline order also, it will be a big numbers in the exports and the percentage-wise, maybe 60-40% kind of a thing. And always now we are taken many clients in our board and majority of the international customers, and also we increase the domestic customer too. I will let you know. It's very difficult to answer your question on this moment until I get a signed PO and many things. But definitely we are in the right path of expand our business to other countries and other areas too. So it is good, but ELTA in the present order book also it is a fairly divided to about 3-4 customers.
Okay, sir. So just want to broadly understand, going forward, do we expect PSU Defense or order book to grow from these levels?
Yes, definitely.
Like a very healthy growth from PSU Defense segment, right?
Yeah. DPSUs, of course, that is the private sector, DPSUs, both are on the radar.
Okay. That's it from my side. Thank you and all the best.
Thank you very much.
Thank you. The next question is from the line of Karan Sanwal from Niveshaay. Please go ahead.
Yeah, am I audible?
Yes, sir, you're audible.
Yeah, thank you for the opportunity and congratulations on good set of numbers. So I have a question like, what is the bifurcation of revenue between our business segment, system integration cables, and also the basis of geographical segments, the domestic and the export market? for FY24?
Now we are not, I think, prepared. Prasanna, I don't know. Yesterday only we done that. And what is we want segment-wise for this?
Yeah, business segment-wise and also geographical segment-wise.
Okay. Can we take this question later, please?
Sure. Also, another question was, we have developed this JV with ELTA. So wanted to understand, like, if ELTA has deployed the obstacle detection system in any market before, and also what are the other types of similar systems available in the market, and where are the systems deployed? Just to get an idea of the opportunity size of the business.
Yeah. Actually, this already, the particular system developed for India. Okay, last 5 years. Already, last 2 years, they got PO of 5 numbers. They supplied 1 number for demo. They want modification. Everything has been done. So finally has been deployed. Finally approved. All the tests and everything good to go. And also they are working with other country too, like what is that place? Netherlands. And also they are working with some European company. Also in the US they are working. And also the product availability. As on today, there is no such product available in the world. Based on this range, there are similar programs. But the achievement of the distance and the precision and those things is the only technology available for the world. In the view of all this due diligence what we have done in our knowledge, and it is only system is available, this particular program. And potential is huge, in very, very big in the world market, and is a global technology what we signed. And Indian market, I'll just tell you about, we have about 15,000 locomotives in India, in the running around in the our track. And the budget is, electronic upgradation budget is about 34,000 crores. So there's a big opportunity. That's the reason this ELTA has been get into this business. I also see, because I'm investing about 210 crore, I also done a lot of due diligence before signing the papers. So team and everything done due diligence. Then only convinced, then we accept this, putting this money, and a huge potential. Matter of fact, we need to have a bulk production to start. So then we can really, is a game changer of DCX.
Okay, understood. That was helpful. And one last question, like, did you say that the offset contracts account for around 70% of the revenue in FY24?
No, that is not an offset order. I was versa. We then offset was 30%, non-offset was 70%.
Okay, understood. Thank you so much. That would be from my side.
Thank you.
Thank you. The next question is from the line of Akshada Dio from Vivo Commercial Limited. Please go ahead.
Hello?
Yeah, please go ahead.
Okay. So, I only had one question, and the 300 crores of QIP, which was kept for the company to be utilized, how was it utilized then, finally?
QIP has been done, totally raised by 500 crores.
Right, and we decided to keep 200 for acquisition and 300 for the company.
Goes to our near JV.
Right.
And the balance, this will be used for our defense JV or technology transfer. So that will be around 200 plus. We're going to utilize that. So that is the allotment of the money. That yet to be utilized. That JV amount to be utilized.
Okay. So how much was just for paying down the debt? Have you utilized this to repay some of the debt?
How? No. See, in the QIB, you are not allowed to touch other than an object of the issue. Correct?
Right. Okay.
Yeah. We are raised 500 crores. We, apart from the issue expenditure, we utilized only $10 million of 85 crores to the NIAT JV. Balance everything will be, there is a fixed deposit done in the bank. Once as soon as the money requirement comes for these only two objects, we keep on using it, other than a GCB.
Okay. Okay. Thank you.
Thank you. The next question is from the line of Sunaina Chapaya from Chola Securities. Please go ahead.
Yeah, thank you so much. I have two questions. The first is relating to the order book, and the second is relating to the operating margin. So just to clarify, the last receipt of order was in the start of Feb from Lockheed Martin and the geographical expansion that was given. So beyond that, in Q4, we have not received any orders, and the order book stands at 800 crores. Is that right?
Yes.
Yes. And
I think I already explained this question in the previous call.
Okay. And my second question is that when we look at the quarterly results that have been there, there is a level of cyclicality where we usually see Q4 having the best revenue as well as the best EBITDA margins. So is this cyclicality going to continue existing in the future? If you could just elaborate on why it happens. And if you could just give maybe some kind of numerical guidance for the EBITDA margin, since there was a contraction in the margin this time.
See, almost from the, not only for today, last 7 years when I grow from 25 crores to 1,400 crores, my revenue cannot be divided by 4 quarterly because of the 3 reasons. One is the component lead time. It is not off-shelf component available in the shelf where you can buy whenever you want. These are specially made by component. That is the reason when the product my customer want a product, they will give a PO for the minimum 1 year time before they want material, they have to release the PO today for next year. Number 1. Number 2, these all custom-made parts. 95% of the component what we used in the product is all custom-made. Suppose I got the PO in March, April. Once I getting the material in the next 6 months. So first quarter, second quarter, don't expect the same revenue. All component where we play in the April we given PO. Next July, August we'll get the component. We need to produce and keep supplying. That's the reason you will have on the graph goes by third and fourth quarter more. This is a history of DCX. Not only many defense companies are like this, and you find similar company of ours. So we cannot divide like 100 crore divided by 25 crores every month. No, because of the long lead item part, custom made part, license, testing for the export license, and our MOD has to clear our each and every export what we are doing. We need to take a NOC. Then other country has to take a export license. This is all process. Sorry. And mainly lead time of the component. Okay, when you pay today, they will deliver after 4 months, 5 months, 6 months like that. That's the reason second and third quarter always you have a jump in the revenue.
Okay. So this is the trend that we would be seeing going forward.
Maybe in upcoming days, maybe improve. In mostly next year, we see some of the repeated components where we have a better visibility and control. Maybe I'm not telling that next quarter comes. Maybe the second quarter onwards, things will be much better control on the previous quarter also. So it will go like that, and definitely it will get improved every quarter. And which we don't want to take a load in the entire thing in the last quarter. It is for easy everything. We are also working with suppliers. Somehow now they have an idea what DCX product doing, what component they want, customer decides. So we have some improvement definitely going forward.
Okay, thank you so much, Dr. Rao. And just a final thing you could touch upon is the EBITDA margins. So we've seen the EBITDA margins for the quarter, which is Q4 of FY24 as well as FY24 compared to FY23. There has been a contraction. If you could just let us know that if there was any issue that you faced in this particular quarter going forward, will those problems persist, or this was just a kind of a speed bump in the road? If you could just touch upon that. And if you could just give some sort of revenue guidance on the operating margins going forward.
One second. If I understand your question properly, you are asking for the last 4 quarter to this 4 quarter revenue. Your EBITDA has been come down. That's what you are telling?
Yes. EBITDA margin. The margin.
Okay. No, this is already explained. You will join later, I believe.
There might have been a slight.
Oh, okay. Which I given nearly 15 minutes. I given explanation. This is engineering cost, component variation, which we cannot climb back. I already answered this question, I believe.
Okay. Thank you, Dr. Rao.
Yeah, thank you.
Thank you so much, and congratulations on the great revenue results.
Thank you very much. Thank you.
Thank you. Ladies and gentlemen, we would take that as our last question for today. I would now like to hand the conference over to Dr. Raghavendra Rao for closing comments.
Thank you, all of you. Thank you, all of you, for a continued trust and support and for taking the time to join us today on this call. I wanted to extend my appreciation to the entire DCX team for their hard work and dedication. I'd like to thank our prestigious investors, customers, suppliers, bankers, and auditors for this continued support. And thanks Adfactor to support on this. Thank you. Jai Hind, Jai Karnataka. Thank you, everyone.
Thank you, members of the management. On behalf of DCX Systems, that concludes this conference. Thank you for joining us. You may now disconnect your lines.